slides up. Okay. So my name is John Vance, president and founder of Vance Wealth. Today is our Advanced Perspective webinar. It's our February edition, and we're so excited here to have a guest speaker. I get to talk to a human being. We're joined by Brian Koegle, who is a partner at Greenspoon Marder. He is an employment law attorney that specializes dealing with the California employment law landscape. So thank you for being here, Brian.
Happy to be here, John. Thanks so much for having me.
Well, we have a great topic. We're going to be covering the shifting landscape in California. And their question is, are you prepared? One of the things that I always find in working with business owners is, too often than not, they're not staying up on top of all the changes in legislations. And as we know, that happens every year. So one of the things that Brian's going to really guide us through is at a high level, what's changed. The reality is, I think if he was going to go through all the compliance requirements, we probably need about a half a day, maybe a full day. So today, we're going to be dealing with some of the important changes that can impact your business. If you find that, going through this with Brian going through this and explaining a lot of the new rules and guidelines that you're woefully out of compliance, it's really important you get this stuff tidied up. And then part two of that is I'm just going to cover the importance of business planning. So, business planning around really helping business owners focus on running their business in a more effective way. Too often we see that business owners are too busy putting out fires, dealing with day-to-day. They don't spend the dedicated time to really work on their business. And so that's what I hope you get out of this, is you get an update on what's going on in California, how to comply, and then also leave this motivated, saying, all right, I got to make sure I dedicate time to getting better as a business owner. So without further ado, we're just going to jump in. Brian, I'm controlling the slides. So if
make it happen, you got this.
If I get ahead of you or if I'm behind, just let me know, and we'll get moving. A couple quick just disclosures. I'm not going to read all this, but we're going to be covering issues that are around legal requirements in California. So we're going to try to give a broad-based educational approach. This is not deemed to be legal advice. Additionally, when we get into some of the tax planning ideas around business owners, this is not tax advice. So make sure you consult with your professional. That professional might be your CPA, or it might actually be Brian as your attorney. So make sure you seek out counsel based on some of the advice that we give you today, or some of the planning techniques. Okay, so at a high level, and I mentioned this in the intro, is that business planning is really this idea of working on your business, not just in your business. It's really about dedicating that time to be a better business owner. And so too often we just see that the time is not dedicated towards it. And that's something that we really preach here at Vance Wealth, is business owners need to spend that time working on the business, because that's how they get better and improve every day. So we're going to spend the time at the beginning of this dealing with California laws on wage and hour. So get ready. This is a fun little ride here on some of the rules that you have to comply with. So Brian, I will let you take it from here.
Absolutely. Thanks, John. And I think that John's idea of what's fun might be different than many of you on this call today, because not many people tell me that wage and hour law is very fun. Rather, just the opposite. I always like to start these stories with a conversation or a story that is actually relevant to the circumstance. And John had said before we got our technical glitch that, lack of knowledge of the law it's not only not a defense, it actually puts you in harm's way. And I just got finished completing a mediation with a manufacturing company that has, at any one given time, between 30 and 40 employees. But over the last 4 years, because they're very high turnover, they had over 190 employees that worked in that 4-year period. And one small technical error was done in their case, to the point where they began the employees' lunch period at the 5th hour instead of beginning it earlier, as required by California law. Well, that one tiny little mistake, literally a 1-minute mistake every single day for 4 years, just cost my client $425,000. So you can see that a strict standard is applied to business owners in California to ensure that you are compliant with all of the requirements of the law, and that you've done everything you need to do to prevent future acts or future risk from occurring. So a couple of things we're going to talk about today on this end of things. We're going to talk about the minimum wage increase. We're going to talk about minimum salary increase, and we're going to talk about new business reimbursement standards. So before we move on to the next slide, I just kind of want to touch base. First of all, if you've been under a rock for the last several years, you may not know that the minimum wage has gently creeped up to the point where in California, the statewide minimum wage for 2023 has been raised to $15.50 an hour. But what a lot of business owners don't realize and they don't think about is the fact that the increase at the very bottom end many times results in increases, incremental increases for those employees who aren't minimum wage workers. So for instance, if you've got workers who are working somewhere between $18 and $25 per hour, and the minimum wage went up $1.50 in certain circumstances last year, then those folks will be coming to you if they haven't already and said, hey, you know, the minimum wage went up and now I'm much closer to minimum wage than I was last year. And they anticipate an incremental increase equal to the increase that was realized at the minimum wage standard. But more importantly, and I think that most of you on this call would be more interested in talking about the fact that the minimum wage in California directly impacts the minimum salary that you must pay to your exempt employees. These are your managers, your administrators, your professional employees, your outside sales representatives, your computer-related occupations, all of the people that you may designate as exempt, meaning, hey, I'm going to pay you a salary for your work. If you work overtime, that's fine, but we don't have to worry about keeping track of your time. You can come and go as you please. You manage yourself. Well, in order to satisfy that exemption under California law as of January 1st this year, the minimum salary you can compensate someone is $64,480 per year. You compare that to the federal standard that is applicable in most other states. There are a handful that have higher minimum wage and minimum salaries, but for the most part, in about 43 other states, the minimum salary is only $35,700 a year. So you can see California is a significantly higher threshold in order to qualify for an exemption. And just so that you know, if for some reason, as of January 1st, your employee was only earning $64,479 or less, you are absolutely out of compliance. That exemption has been lost, and you must be able to reclassify them as exempt and make sure that you meet all the standard threshold requirements. That includes the minimum salary. So just make sure that you're thinking about those things, because a lot of folks go, oh, well, I don't have minimum wage workers, so the increase doesn't really impact me. It absolutely does. And I'll talk about it in the next slide, but for those of you who have businesses in the city of Los Angeles or the county of Los Angeles where it's not as part of an incorporated city, such as Santa Clarita, Pasadena, Glendale, Long Beach, Glendora, those are the cities that are exempted from the county of Los Angeles's minimum wage standard, which is significantly higher for 2023. The one other thing I want to speak about on this slide is the business reimbursement standards. This year, the minimum reimbursement for mileage jumped up precipitously, up to 64 cents per mile. It was almost a 10-cent increase from last year. This is the largest single year gain that the IRS has recommended for mileage ever. So that is a significant jump that we would have to make sure that we're complying with, because under California's labor code, section 2802, an employer is legally obligated to compensate their employees for any out-of-pocket business-related expenses. That includes if they're using their personal vehicle to travel for your business. So that is a huge area. And I don't want to touch too much on the reimbursement, but also make sure that if they have any personal protective equipment, boots, masks, gloves, goggles, tools, equipment, overalls, any of that, make sure that you're taking care of those reimbursements early, because we see a lot of cases that add reimbursements and it becomes a very, very expensive case. So I touched on this on the last slide. I told you what I was going to tell you. Now I'm going to tell you. As of July 1st of 2023, the minimum wage that for the county of Los Angeles, so if you've got lower end workers, pay attention to this, July 1, it's going up to $16.90 an hour. Doesn't matter the size of your business, whether you have 25 or under or 26 or more. This is the first year that they've blended that rate, $16.90 an hour. Now, if you remember on the last slide, I talked about the exemption standard. The county of Los Angeles and the city of Los Angeles Their minimum wage standard does not apply to the exemptions. We only have to use the California standard of $15.50 an hour. But I do want to flag for you that the legislature up in Sacramento, they're already busy sharpening their pencils. They are looking to raise the minimum wage over the next 2 years to $18 an hour. It would be an increase to $17 come January 1, 24, and then $18 an hour come January of 2025. So keep an eye out for those.
Hey, Brian, why,
Yep.
Usually you see all that unified. So why do you think, or is there part of the statute that keeps that $16.90 per hour, not part of the salary or the exempt employee doubling of that rate? Why is that not part of it?
Well, because remember that salary exemptions are gauged under the statewide standard. It applies whether or not you work in Los Angeles County, Orange County, Ventura County, Riverside, San Bernardino, or anywhere up north, including some of the smaller counties. So the statewide minimum wage has to be an even-handed application. There are cities within California, including San Francisco, that have minimum wages even higher than $16.90 an hour. San Francisco, Oakland, and Alameda, for instance, all have minimum wages already in the range of $17 an hour. So the idea is to have uniformity statewide, because the exemption standard is a state standard, not a localized standard.
Got it. Okay,
that's a great question, though, because I get that all the time when people say, well, I'm not doubling the County of Los Angeles's minimum wage. You don't have to. That is one of the very, very, very few good things about California employment law.
And for business owners that are in the city of Santa Clarita, that number is at $15.50 effective July 1 of this year?
That is correct. And I'm sorry, there is a typo on here. It should be $15.50 per hour.
Oh, $15.50. Okay.
Yeah, $15.50 per hour, January 1. And that is the statewide standard. And because if your business is in city of Santa Clarita or in the city of Pasadena, Glendale, Long Beach, Glendora, those are the cities that are separately incorporated within County of Los Angeles. Those cities are exempted from the County of Los Angeles requirements.
Got it. Okay.
Yep. So just a real quick primer on this, because I don't want to spend a whole lot of time, because I could spend, as John said, probably half a day just talking about overtime and double time. But just as a reminder, California does not follow only the Fair Labor Standards Act when it comes to overtime. Fair Labor Standards Act says that anything over 40 is time and a half, period, end of sentence. Real easy, simple calculations. If you've got people who are working 10 hours a day, 4 days per week, that's perfectly acceptable. Well, not in California. California implements an 8-hour overtime rule as well. And so unless you specifically have elected an alternative work week schedule, and for a lot of you out there, you're saying, oh, yeah, we're on a 410 or we're on a 980. I bet you are not. I bet you have not gone through the proper protocols of electing your work weeks and reporting it to the state of California, because about 85% of businesses who tell me that that's what they think that they've done, they did not do it properly. So remember that if an employee works 8 hours or more, up to 12 hours, they get paid time and a half for that work between 8 and 12. Anything beginning at 12 hours and 1 minute and higher, that's double time. So that's double what their regular rate of pay is. Also, just as a quick aside, regular rate of pay, not necessarily just what their hourly rate is or whatever you've salaried them at. It is based upon all compensation received by the employee. That would include bonuses, commissions, any kind of incentive pay, certain kind of perk bonuses or gifts that are given to them throughout the year. All have to be recalculated into the regular rate of pay when we're looking at overtime. We also follow the 40-hour rule in California. So if there is also overtime worked over 40 hours, that is compensated at time and a half. And then the fun part is if you have an employee who works on the 7th consecutive workday during the week, they are also entitled to time and a half for their first 8 hours and double time for their any time after 8 hours. 7 consecutive days is not 7 consecutive calendar days. It depends on how you define your work week. So if you define your work week like most employers, Sunday through Saturday, then if somebody worked all 7 of those days, they started on Sunday and worked all the way through Saturday, Saturday would be your triggering day. So just be aware of that. Make sure that you know what your work week is defined as, should be in your employee handbook. If you haven't updated your handbook in a number of years, this is the time to do it. There were several changes this year that require written changes to your policies and procedures. And if you don't have updated policies, that's not just strike one against you, that's strike one and strike two. Now all you need is an employee who comes forward and brings a claim.
Got it. Okay.
All right. The biggest thing that came out of 2022, guys, was the change to these concepts of pay transparency and pay reporting. And the legislature in California has identified several issues that they want to make sure that they are ensuring equal pay for substantially similar work. Not equal pay for equal work. That's the federal standard. Here it's equal pay for substantially similar work. And so now the government is going to be looking over your shoulders as business owners to make sure that you are paying your employees fairly, equitably, and reasonably, and you're not discriminating or making a decision based upon pay that may result from different skin color, different racial backgrounds, different disabilities, sex, gender, orientation, etc. So for all of you who have 15 employees or more, one of the things that you're going to be required to do as of January 1st of this year is make sure that on all of your disclosures, wherever you are posting an advertisement for a vacancy, an open position in your business, you must now include the entirety of the pay band for the type of position that you are seeking. So if you're looking for a project manager, you need to make sure that your pay band that you're reporting applies to the type of project manager that you're looking for. This really highlights one of the issues that I've been focused on the last 3 or 4 years with my clients, which is making sure that when you're out looking in a job market, you know what you're looking for. Are you looking for somebody with no experience that you can train up? Are you looking for someone with medium experience who's been in a job for 4 or 5 or 6 years? Or are you looking for somebody who's more senior, 7 years plus? If so, your job description needs to identify what that type of role is, and then you identify the pay band that would be applicable to that particular role. Additionally, if any employee that currently works for you asks for pay data and says, hey, I want to know what the pay band is for all the project managers, you have a legal obligation to turn it over. If you do not turn it over, it is a penalty of $25,000, plus the employee has a civil claim against you for violation of the labor code. Whenever there's a violation of the labor code, attorney's fees attach. Not just your attorney's fees to defend you in a claim, but the plaintiff's attorney's fees. And if any of you have ever been sued, you probably already know that is the tail that wags the dog. It is the motivating factor that gets these plaintiff's attorneys off their butt in the mornings and suing businesses like yours left, right, up, and down. Because if they only recover $1 for their client, they're still going to get all of their attorney's fees, and that number can be excess of $500,000 to $700,000 on any one of these claims. So just be thoughtful.
So, hey, Brian.
Yep.
Oh, I didn't mean to interrupt, but you know, one of the things that, you know, obviously, well, some business owners aren't as good at having even job descriptions and having like clearly defined roles. And so, you know, what's kind of that protocol? Obviously, this is at the end of this is make sure you have transparency, you have pay bands, but what if people don't even have proper job titles, proper job descriptions, and then trying to define the roles and responsibilities, experience, and all the things you mentioned? How do you go about going through and getting this right size so that they're doing the right things?
Yeah, the best way to do this is to sit down with counsel, whether it's me or your employment counsel, if you've got a relationship with someone, and you sit down and you basically lay this out. And counsel can guide you, assist you. I mean, really the day-to-day activities and the duties and the responsibilities, you're going to have to fill that in. But fundamentally at its core, you need to have a well-structured job description for every single role in your business. And if you don't already have that in place, it's already a violation of California's labor code requirements under the Fair Pay Act that was passed back in 2018. So you really need to ensure that you've got that kind of building block in the cornerstone before you start building up and start talking about pay banding. And then we kind of get to that second tier of, okay, now how do we pay band this? Well, there are a lot of restrictions. It can only be 10% plus or minus from a midpoint number. It also has to be reasonably tied to the duties and responsibilities. There are a lot of elements to this that take a lot of effort. And again, I'm not trying to talk myself into work here. I know there are a lot of great employment attorneys out there, but it is imperative that you've got that fundamental building block first before you start talking about complying with these latest and greatest laws.
Okay.
The one last thing I wanted to focus on transparency is that now there is a requirement for you to maintain all job postings, listings, anything you put out on Indeed, anything you put out on SCB Jobs, anything that you put out on LinkedIn, anywhere that you post an ad or you're seeking the assistance of a third party in order to bring in candidates, you must maintain those documents 3 years from the posting date. And candidly, my recommendation is that you keep them for 4 years, because California has a separate statute that is a very unique element that allows them to open up claims that may be up to 4 years old. So the statute says it only has to be 3, but I recommend 4 in this circumstance.
Got it. Hey, Brian, we did get a question.
Great.
I think I know the answer to this, but does pay transparency apply to 1099 consultants or just to your employees?
Well, in the truest sense, it would not apply to 1099 consultants or independent contractors because they are not subject to the California Labor Code. This only applies to employees. But to the person asking that question, I would challenge them and say, I'll bet you your 1099 probably isn't a 1099, that they're not a contractor, because that loophole closed in 2020 when the ABC test was brought in by the state of California, and almost no independent contractor can satisfy the 3-pronged test that the state has set forth as part of this. And it is an incredibly difficult task to qualify someone as an independent contractor now. So just be careful. You should probably talk with counsel on that issue just to make sure that the roles and responsibilities by your contractor fit into one of the very specified categories that the legislature has allowed now.
Okay.
The one other takeaway, 1 second, just go back for 1 minute. The takeaway from the pay transparency requirements, make sure you have a written equal employment opportunity policy as part of your handbook that all employees have, basically stating that you will not discriminate based upon race, religion, physical, mental disabilities, sex, gender, sexual orientation, any one of the 20 protected categories under California law. 2, make sure you have a good, well-written document retention policy. You do not want someone accidentally getting rid of these documents in the midst of your attempt to try to hold on and comply with the law. And making sure that your job descriptions indicate the pay bands that are applicable and that you're updating those annually. All right, now we can move along. So the second part of this act that I was advising you about is the pay reporting obligations. Now, the good news is for those of you who have smaller businesses and you have fewer than 100 employees, this doesn't apply to you. You can sit back and relax just for a minute while we're talking to the larger employers out there. But for those of you who are employers with 100 or more, you are required to make sure that you're reporting all of your tracked pay across sex, gender, race, and ethnicity. This is a report that now needs to be submitted to the state of California. For most of you who had 100 plus employees, you already have to fill out an EEO-1 form and submit that to the federal government every year. This is a separate form, and it requires a lot more data. You have to parse out every employee into 10 different categories based upon their job descriptions, and the government is describing the job descriptions. Then within those 10 job descriptions, you have to break it down by 12 different acceptable pay bands. Additionally, those pay bands are going to change from year to year based upon the consumer price index and based upon other economic factors. So you're not going to be able to just take the report you filed last year and refile it the next year. You will have to go back and adjust and modify this data on an annualized basis. And then finally, as part of that report, every single employee that works for you within the state of California, you must also report the number of hours that those employees work. So this is a lot more intensive, a lot more scrutinous than the EEO-1 form is. Additionally, because it gets filed with the Division of Labor Standards Enforcement, that's the labor commissioner, guess what? You've got the wolf watching the hen house on this. The labor commissioner is charged with enforcing the labor code laws, and now you're turning over all the data that they need to determine if you are in full compliance, and they have the authority to turn right back around and bring a claim against you. So just be aware of that, because if that data is not accurately reported, you will find yourself in hot water with the labor commissioner. Just for those of you who don't know already, this report will be due on May 10th this year. So make sure that you're ahead of the game, make sure that you've got your data compiled, and make sure that you're ready to get that report on time filed, because if you don't, it is $500 per day that you do not file that, up to a maximum of 1 year, which is 365 days, quite a hefty penalty.
So, hey, Brian, on that, are you finding that like payroll providers are helpful in these reports, or is this the literally manual work having to be done by HR departments for these larger companies?
So depending on who the payroll provider is, it depends. I will tell you that many payroll providers will provide you assistance, but it does not come without a cost. You will have to pay for this additional service. Additionally, the question is going to be, does the payroll provider maintain your HR documents as part of this policy? Normally, that's reserved for PEOs, or staffing companies, or agencies that do both payroll and HR together. If it's just a separate standalone payroll company, they won't have the data to be able to separate this out, to be able to give you a singular report based upon the different job classifications, based upon the different race, ethnicity, gender, and sex that are being provided. You will have to still fill and complete that data.
Okay. Got it. All right. Oh, more stuff.
Yeah, I try to keep this, I try to keep these short and sweet, but I could spend literally 30 minutes on any one of these. Bereavement leave is now mandatory under California law. It is still considered unpaid leave, but you must provide in your employee handbook that an employee may take up to 5 days of absence away from work, job protected, for the death of a family member. This death, and again, if somebody loses multiple people in the same year, you must provide 5 days per lost family member to the employees. Secondarily, the employee would be entitled to receive paid family leave during the time period that they are gone if they do not have PTO or vacation time accrued. What is paid family leave? That is provided by the state of California as part of your unemployment insurance contributions from your business. So if they have PTO, if they have sick leave, you must allow them to use it during that time period. And it is a job protected leave. So you cannot discriminate or take any adverse employment action, even if they have successive deaths. The one good piece of information out of the Bereavement Leave Act is that you as an employer are permitted to ask for permission or for written proof of the passing of a loved one. I don't encourage that. I wouldn't do that with my business. And so I don't encourage my clients to do that, because you can only imagine how difficult it would be in a circumstance where someone has lost a loved one and now they have to provide a death certificate because their boss won't let them leave. I can tell you right now that this will be the next wave of litigation that we see in California as a result. So make sure you've got your HR consultant and or your attorney on speed dial when it comes to bereavement leave, making sure you're doing this right. Cal OSHA requirements have changed. It's really interesting. All safety postings must now be posted in the top 7 non-English speaking languages in California. So every single one of those Cal OSHA notices that y'all have hanging up on the bulletin board in the break room or the restroom or wherever your common area is that you have your posters, those postings, if they are safety oriented, they must be posted in 7 languages in addition to English beginning January 1. Additionally, while COVID is now officially no longer a pandemic and the state of emergency has been repealed as of this afternoon, in fact, just about 10 minutes ago, it elapsed, your requirements to continue posting safety protocols for COVID-19 remain intact. Make sure you have up on your bulletin boards that if someone is sick, they are to stay home. If they test positive, they must stay away from work for 5 days. You must have your policies and procedures as to what needs to happen if there is an outbreak in the workplace. And you will still continue to need to report any major outbreaks. That means if you have 4 or more employees who test positive for COVID-19 within a 2-week period, you must still report that to the County of Los Angeles. So don't think you can just skip over it because we're no longer in a state of emergency. The Cal OSHA requirements are continuing on through December 31st of this year. Cannabis use protections. Well, we knew that this was coming. We knew that it was inevitable. The moment that they made recreational cannabis use, for those of you who don't know what cannabis is, that's marijuana. If we didn't see it coming, then shame on us. But now Cannabis use in personal private time is now protected under the Fair Employment and Housing Act. It is illegal to discriminate, harass, or retaliate against an employee because they choose to recreationally use marijuana. Very, very, very few limitations on this, folks. If you're in the construction industry, you do not have to comply with this. If you are a federal government subcontractor, you do not have to comply with this. Additionally, if you have state health and safety code applications to your business that require drug testing, etc., then you do not have to comply. But for every other mom and pop business, every other mid-level business, every other Walmart of the world can no longer discriminate if an employee uses cannabis in their recreational lives. The problem we face, folks, is testing for cannabis right now is extraordinarily expensive to determine if someone is actually high or under the influence while at work, right? It used to be if somebody showed up with bloodshot eyes and was eating a bag of Cheetos, we could send them over for a drug test by virtue of the fact that we had reasonable suspicion. Well, the drug test that would be able to determine whether or not somebody just partied it up last night or possibly over the weekend versus being high or under the influence at work, that test costs over $800 to complete if you send them to a clinic. So most businesses have just simply stepped back and they're no longer enforcing their drug policies as it applies to cannabis use. If that is the position that your company is taking, you must make sure you reflect that in your policy. Make sure you change and update your employee handbook if you haven't done that already. So just be aware of that. Additionally, if an employee comes back and says, well, the real reason that I was terminated is because I like to use weed on the weekend, it is now your obligation to provide proof, evidence of a legitimate, non-discriminatory reason for the termination. And that is a question of fact for a jury in Los Angeles County to make a determination on. Don't know about you, but that's not something that my business would like to have to deal with, trying to argue that to a jury who they themselves are probably having a very good time in the jury box. All right, reproductive health decision protections. This was put into place after the Dodd decision from the United States Supreme Court this June. Basically, it is a protection of a woman's right to exercise her right to receive an abortion, and that an employer cannot discriminate against a woman who chooses to do that. So if she chooses to go and obtain medical care, then the employer must provide her an accommodation that includes a leave of absence so that she can go receive the medical care and then recover from the procedure after the fact. If you take action against a person who has exercised her rights under this, it does trigger a violation of the Fair Employment and Housing Act, and you will likely be sued by a plaintiff's attorney saying that you have taken discriminatory hiring action against this person. And then the final issue on this slide is the Consumer Privacy Rights Act and the California Consumer Privacy Act for employment records. This just was an expansion that began at the beginning of 2022, but we got clarification in about September. Really nice, right? They passed the law, they tell us we have to comply, and then we have no regulation to understand how to comply until 3/4 of the way through the year. But we now know that you must take steps to maintain personnel records that contain personal, private information, PPI, inviolate, meaning if you store records electronically, you must make sure that they are encrypted, password protected, and cannot be hacked into. If you keep paper copies of personnel records, they must be in a locked drawer or a locked office with limited access where no one else can access the personnel records except for the person who is maintaining those records. If you are not taking those affirmative steps to lock those up, to make sure that that PPI can't be disclosed in whether intentionally or accidentally, then you may be facing a circumstance where you have released data and it is a breach situation. You would have to pay for credit monitoring services for your employees if their information was compromised. Additionally, it opens you up to civil litigation under the labor code, which as we've talked about today, is just a mess. You need to stay away from it. So make sure you've got policies and protocols in place to make sure you're protecting those records so that not everybody can just walk in and access a personnel file.
That makes a lot of sense. I mean, I threw this in from last time we spoke. I just thought it was a good reminder.
Yeah, and I mean, listen, I always end my presentation with this because I think it's really important as a reminder for folks. And, as John said, you want to be working on your business. You want to be building your business. You don't want to be looking over your shoulder thinking, oh my gosh, I've got to do these policies and such. So that's why you need to bring people in to support you, who know what they're doing, who can answer your questions and take your mind off of it so you can build your business. First, if you're not performing an annual audit of your employment practices and policies, you're behind the 8 ball. You should be doing this at least once a year, if not twice a year. Inclusive of that is updating your employee handbook. I've given you 3 things, and there's actually a 4th that I didn't get to go over today, which is arbitration agreements. There are 4 things you should be updating in your employee handbook this year. You really need to be sitting down and revising this so that your policies are up to date and that you're not out of compliance. Maintaining those written job descriptions for every category of employment. We've touched on this throughout. If you need assistance, please reach out. I'd be happy to help you out to come into compliance in this area. It's literally, when I tell you pennies on the dollar of what your risk would be if you don't take care of it, it is pennies on the dollar. An ounce of prevention is worth more than 100 pounds of cure in this area. Conducting an annual written audit for every exempt employee's classification. We talked about the minimum salary, $64,480 a year. That's only one element of those exemptions. You need to make sure that folks are still doing their exempt duties on a regular basis. Updating your wage claim release language. Every person who keeps track of their time punches, when they're punching in at the beginning of the day, out for lunch, back from lunch, and out at the end of the day, they should have a chance to review that timesheet, whether it's on a daily basis, a weekly basis, or on a per pay period basis. And when they're reviewing their time before it goes to payroll, you should have them execute a declaration, a statement. Don't write this down, shoot me an email, I'll be glad to give you the language. It says, all of the hours reflected above are true and accurate to the best of my recollection. I did not work any unauthorized overtime or time off the clock. I received all of my prescribed meal periods and rest periods, and I did not sustain any known on-the-job injuries this week. Sign it, date it. Powerful evidence, guys. Extremely powerful. I've fought back many, many wage and hour cases, many PAGA claims, Private Attorneys General Act claims, just based on those statements. It's very strong evidence for us. Making sure that you're providing a Labor Code 2810.5 notice to your employees. A lot of folks just give an offer of employment. You have to provide a 2810.5 notice. It says the legal name of the business enterprise that they work for. So if you're Vance Wealth Group, but the name of the business is John Vance Wealth Group International LLC, it has to have that on the 2810.5 notice. You must have that information along with your workers' compensation data, all pay rates and compensation information, when payroll is being provided to them for the work weeks that they've worked, and who to contact in the event of a claim. Finally, if you don't already have employment practices liability insurance, good luck getting it in California right now, because most of the carriers are pulling out because of just how expensive these claims are to defend, but it is still available. This defends you against wrongful termination, harassment, discrimination, retaliation type claims. It might even provide you a defense to some of the wage and hour cases we've talked about. It won't pay settlement dollars, but it'll provide you a defense. And as much as I'd love to have you guys pay me a check to defend you, I'd much rather take the insurance company's money than yours. So take a look at EPL, determine if it's right for your business, and if appropriate, then go ahead and secure that so you protected your business. It's one extra layer of protection from a business planning model that makes a lot of sense.
Okay, perfect. Thank you. So a couple of things we're going to jump into. So this is dealing with just some planning stuff. So the reason we were transitioning from Brian to myself is, we went through that list of those 7 items. And I really look at this as, when you're running a business, as I do, as many of you on the call, is the reality that you have compliance stuff that you might be doing, your team might be doing, but there's always these things you should be updating on an annual basis. Great to do it at the beginning of the year, starting the year off right. That's also happens to be when a lot of the laws go into effect. So this is just something as you get into the course of a new year. One of the things that I see too often, especially with S corporations or even primarily S corps, is that they don't have their bylaws aren't up to date. They're not holding their annual meetings for directors. They're not keeping annual minutes. They're not even keeping some of the annual filing requirements that are required by the state, and documenting major business decisions. And then those are some of the things that we look at from a compliance perspective that we just see. It's kind of like deer in headlights when I bring up, oh, when did you last do your annual minutes for your corporation? And it's like, what do you mean? I don't know what that is. And obviously when we're dealing with bigger companies, it's not their first time doing this. And so the reality is, the smaller you are, the more I think you're not going to be in compliance, because you're just not aware of all these things, because you don't have a team around you to support. And that's where, a good advisor, good attorney, a good HR consultant can really come in and help you in this area. And then this last one, I see this too often with people who own S corps, especially if they're the only owner, is this avoid commingling business and personal assets, where this becomes kind of the piggy bank of the individual, is just improving the owner's lifestyle. And so just be careful on that from a compliance perspective, to really avoid piercing this corporate veil, which does provide some of the liability protection. So I'm going to pivot into this idea of what I call a planning day. So part of Vance Wealth, we provide business and tax planning. And so, in order to do proper business planning, we really identified there's this big gap that business owners have, and they're not taking the dedicated time to actually do it. And I can totally relate to this, because when we get into the course of doing our work, we have our clients, our customers that we service and take care of. We also have our employees and the needs of the business. And so what happens is you're kind of jumping from task to task, and you're not really dedicating the time. And so what we've really done is embrace this idea of, as a business owner, is taking a monthly planning day. And it's really a day where you're focusing on big picture items. And I know when I talk to especially like attorneys, when you're trying to actually craft something thoughtful and dig into the weeds, it takes time. This isn't, a lot of this planning can't be done in 15-minute increments. You actually need to dedicate the time where you actually can get into the mindset of thinking and being more thoughtful and strategic. And so this whole idea around committing to a monthly planning day. So I've been doing this for over 2 years now, where one day per month, I block off on my calendar. I am out of the office where I don't have the interruptions. And a lot of times I'll check text messaging, but I won't really check emails, because I truly want to have that day blocked. And so if you're finding the struggles to actually plan for your business and you're just dealing with putting out fires, try to embrace this idea of a planning day. And these are the kind of things you get into January. You're like, okay, maybe my January is dedicated to HR related issues. Okay, what do I need to do? What are the new rules? Who do I consult? You don't need to fix all these things, but it's just putting that dedicated time into making sure that you are compliant, and then you're helping to move the business forward. And so the planning day idea that we look at, we call it our Simplify Planning Day, because you can see my quote here that I have from John Wooden is like, don't mistake activity with achievement. So too many times people are just going through the motions of doing activity, and they're not really making progress. And that's why like a dedicated day can be really helpful. And so by doing a planning day, there is part of the tax code, and I mentioned this before in other webinars, that is called the Augusta rule, and it allows business owners to take some business deductions, basically being able to pay themselves rent for the use of their home for this business planning. And so what we recommend, this is just a sample structure. So I know some of the stuff might look corny on here in terms of like, look at your starting your day, mental focus, meditation, mindfulness. We really think that if you're going to do a proper planning day, you want to set yourself up for success. So this is just a sample of how I run my days, is like get mentally focused, maybe listen to podcasts, read a book, get you in the mindset of learning, developing, and then really plan your day out. So early on and during my monthly planning day, we'll review goals, my personal goals, family goals, even like check in on your health. How are you, mental health, physical health? Are you doing the things that you committed to at the beginning of the year? Because if you're like most people and most business owners, you might set goals in January and you don't look at them again until December or even the following January. And so a big part of this monthly planning day is to reconnect on a monthly basis to make sure you're making progress towards those goals. And if you notice on here, how I break out a really good planning day is dealing with having essentially 3 key areas to work through issues. So I have 3 2-hour time slots where I work through issue 1, 2, and 3. Sometimes things can get more complicated and I just handle one issue, but for the most part, I try to tackle 3 separate issues that are important to the business. And so again, by dedicating to this monthly planning day that we call a Simplify Day, it does simplify your life because it gets through all that noise that a lot of times we're dealing with stress around, these are things I never get to, and then you're not getting to them because you're not setting them as priority. But by planning out your calendar, I have my entire year already planned. I know the days that I'm going to dedicate, and because this becomes a priority, and then it actually really moves the needle. So I would challenge you to try this. And if you do this and you take that dedicated time every month out of your business and you away from your business, excuse me, and you actually do it in your home, you might be able to take advantage of something called the Augusta rule. So just from a time perspective, I don't want to make you an expert. This is something we can follow up with our team on, is that you can basically legally rent out your home to your business for up to 14 days tax-free. So a monthly planning day would cover 12 of those days. For me, I do a monthly planning day, and then I also have a semi-annual and annual planning day. Or actually last year, what we did is I did a summer barbecue with my team, and then I did our holiday party at our house. And so this basically is like getting a tax-free distribution for the company. So if you want to embrace this planning day, there are some actually pretty cool tax benefits. Now, again, I mentioned earlier, can't give you tax advice, so it's something that we always run by your tax professional. But if this is something that is intriguing to you, there's definitely some real tax benefits of this. And I know a lot of business owners, they look at all these compliance costs, the things that Brian's talking about, and the things that we know, the advice we're getting from our accountant and everything. There's so much additional cost of doing business in California. So having a higher focus around, are there ways I can save money in other areas? This is a good example. Utilizing the Augusta rule to not only plan more effectively, but also to save some taxes along the way. One of the things that's really important, again, we kind of have this compliance focus. I have talked to people like, oh yeah, I'm doing this, I'm implementing the Augusta rule, and a bunch of the key things that they're not taking into account is what's the business purpose, not having documentation to support the business purpose, and also it's difficult to determine fair market value rent. How much can you justify renting your home out to do these planning days? And that is something that we can help you with. But it's really important that if you're going to do this, that you have all these documented. It's like everything. I mean, going back to what Brian mentioned earlier, you got to document it. You got to have processes and procedures and policies that you follow. And that's what's going to help you stand up to dealing with any, who's the governing body in California that we're dealing with on your side of things?
Well, Labor Commissioner is on my side of things, but if you're talking about the Augusta rule, you've got obviously the IRS and the franchise tax.
Right, but then on your end, so you always have these compliance departments that are or divisions that are looking at things. So it's really important, obviously, to make sure you're doing what you can, to dot the I's and cross the T's. And so,
well, and John, one other thing: invite your friendly neighborhood employment attorney to your house for your annual meeting when we go through your policies and procedures. I mean, these are some really interesting and clever ways to maximize the tax benefits here.
Yeah, for sure. I mean, a lot of the business owners kind of live in a very lonely environment because they're the only owner. So it's like, who do you bring in for these planning meetings? It could be your professional, meet with your employment law attorney. It could be meeting with your CPA. You can structure that time effectively based on the needs for your business. And so as we get into and wrap up today, one of the things that I think too often is we live in the past, we live in what happened last year, or what's going on immediately, and we're not trying to anticipate the future. And that's a big part of business planning, is we all have goals. We all look ahead. That's, I think, one of the reasons why so many business owners put the time in to build a business. And a lot of it is freedom of time, sometimes, and freedom of money. Those are the big things that I think a lot of us desire. But a big part of being good from a planning perspective is anticipating the future. And that's where the financial planning, the tax planning, the business planning comes into it. And so one of the things that I want to just shed my thoughts, shed a little, a bit of light on this idea around planning, having a more thoughtful tax strategy. So I think so many of us are wired to just save taxes at all costs. And while we could take that approach that, yes, I do want to save taxes over my lifetime, I think it's a mistake to take an approach of, I need to maximize my tax savings just this year. I do think this kind of idea of anticipating the future is, when you're trying to lower your tax liability, you want to lower it over your lifetime. And too often than not, we focus on just the one given year. Because I know it's immediate, it's in your pocket today, but sometimes people make decisions that will harm them later because they're not being thoughtful enough about what's the future look like. And so the reason why I have this chart, if you notice on here, it does say 2022. So this is last year's taxes. All of us right now are in the process of getting our documents, getting ready for tax season, and you're going to have some decisions to make. If you're a business owner, do I do a profit sharing account? Should I be funding different vehicles for my retirement? And so one of the things that I would challenge you is that, and if we're going to focus here on the right-hand side, if you're married and filing jointly, and if you look here, you have this 24% tax bracket. So up to about $340,000. I would tell you that you're in a situation, you're in an environment where your taxes are artificially low right now because of the Trump tax cuts. So the way you read this, there's a lot of numbers on here, but on the right-hand side, it shows married filing jointly in 2017. These were the tax rates prior to Trump changing this through the Tax Cuts and Jobs Act of 2017. These are going to sunset at the end of 2025, which means in 2026, these tax rates are coming back unless Congress can act. I don't have a ton of confidence of our Congress actually getting together and compromising, especially on tax policy, right? I see a big smile, Brian, but we don't have a lot of faith there. The reality is if these sunset back, you might be in the future looking at higher tax rates. Because if you look at this bracket, the 24% bracket goes up to 340,000. And if you look here, 25% brackets is 75 to 150. The 28% bracket's 153 to 223. So the reason why I'm bringing this up is that if you're faced with decisions of should I fund a profit sharing, a SEP IRA, different types of accounts, you might choose to pass if you're in these 24 and 22% brackets, because if you put it into a retirement account that you get a tax deduction today, you might be in a situation down the road if tax rates go higher that you're taking it out at a more expensive tax year. So just be mindful about that. Most people are just hardwired to always fund their retirement and just do it on like clockwork because that's what they're accustomed to doing. Sometimes it's better to pay the tax, have that liquidity so you can make different decisions and not just have that money in your retirement accounts. I love the idea of saving. I don't want you to spend the money, but sometimes it can be redeployed in other areas that are more effective. And then as we go into the last component, payroll optimization. So this is a hot topic. I think that what does the payroll optimization really mean? When you're a business owner, especially of a small business, you have decisions around your own personal payroll. How much do you pay yourself? What is a reasonable wage based on your job duties? And too often, there's not enough thought that goes into this, where you're paying yourself too little, which is a huge red flag for the IRS. That's one of the top 5 areas where people are getting audited because they're not paying themselves enough. And you kind of know who you are. I've had a doctor in the past that was paying themselves like 50,000. It's like, that's probably not a reasonable wage. So you have to be reasonable with this. And, sometimes it's the interpretation of what's reasonable, but it has to pass some sort of smell test and not just be totally made up. So that's one side of it, is paying yourself too little. The other side of it is paying yourself too much. We also see sometimes people are paying unnecessarily high payroll tax, and by doing so, they lose some other deductions. They might lose QBI deduction. They might be paying more in payroll taxes than they need to. So being really thoughtful about this is important, and it's really important to be thoughtful about it annually. So even though you have a plan in place, you should be reviewing this every January and said, okay, we did this last year. Does it make sense this year? Too much is on autopilot. And that comes back to this notion of business owners, you get set doing what you're used to, and you forget that, hey, rules change, amounts change, life changes, tax policy changes, California employment law changes. Make sure you're staying on top of things and being thoughtful about how, when things are adjusting, that you're actually making those adjustments along with it. So what I will tell you is this is one of the best ways, focusing on payroll optimization, especially if you have a spouse involved with the business, especially if you have teenage or college-aged kids that are involved with the business. There's some pretty massive tax savings that you can actually tap into that you might not even be aware of. And so it's definitely an area we can help with, or talk to your accountant. We're probably the better fit for that. And I'm going to wrap up here because I think we've kind of hit our time. So we didn't have any more questions, Brian, and I know today I let you go and I went, but hopefully this was helpful. So, I think the long and short of this is, from my humble opinion, like spending more time focusing on the business really moves the needle. And if you haven't woven in what I would probably call like a bulletproof California employment law, like liability management, in terms of reviewing the rule changes, making sure all of that 7-point checklist that Brian recommended that you go through every year, that's got to be incorporated into what you're doing. And then not only that, then you have the tax component, the business component, some of the things that I discussed. And so just be more purposeful there. One of the great things about our webinar too, if you're either live or if you're watching it on YouTube, Brian and I make ourselves available. We want to make an impact to business owners in the community. We are happy to give our time to provide, to at least listen and to provide some high-level guidance. We might not be the right fit, but we can definitely get you in the right or point you in the right direction. So if you notice on the screen here, you can actually scan the QR code for myself. And then for Brian, his email is on here, also his phone number and his website. So Brian, as always, it was a pleasure, and hopefully I'll see you when you make your way back to Santa Clarita.
Absolutely. Thank you, John. I appreciate you having me, and I hope everybody found this to be informative. Appreciate it.
All right. Thanks, Brian.